welcome to MyWealth.com. I'm Mike Conlon. I'm one of the senior instructors with the courses. Welcome to today's blog. Today's blog is entitled, Fed Up Yet? All eyes are on Ben Bernanke and the Fed this week as investors are seeking a little bit more clarity over Federal Reserve policy going forward and what they plan to do with regard to interest rates. All right, now couple that with the G20 meeting taking place this week in Pittsburgh and growing concerns over the rising U.S. fiscal deficit, and you have a potentially explosive situation. However, if you've been watching the markets as of late, you would know the potential for fireworks is highly unlikely. The Ben Bernanke show is in full effect, and market contrarians and early participants go through this exercise with the FOMC meeting like clockwork, basically every time. Okay, it starts with the U.S. dollar showing signs of early strength going into the meeting, followed by a drop in commodity prices and lower U.S. equity futures and index prices. Okay, next, the claim is made that the fundamentals are starting to come back into play and that inflation may be rearing its ugly head. This naturally leads to the conclusion that the Fed may have to start raising interest rates, okay, which sends the U.S. dollar higher and all other markets lower, temporarily. Okay, I wrote about this earlier as there are now essentially two trades out there in one of my previous blogs. Let's take a look at what's really going on.
As always, be sure to check out the written blog at www.mywealth.com/blog. Okay, so to Bernanke, we need to reflate before we can inflate. Okay, and what I mean by that is that we've seen so much asset price depreciation and deflation so far. Okay, that in order to get back to just even comfortable levels, any inflation we're going to have from this point is still going to be shown as reflation. Okay, not really inflation. So. Right now, you're not going to hear anything about inflation out of Bernanke. All right, he's afraid to spook the markets. He doesn't want, the markets are forward-looking. He doesn't want people thinking that he's going to be raising interest rates anytime soon. All right, so he's not going to change his language that's used going forward. He realizes that the market is still extremely fragile. Okay, so anything remotely related to the possibility of higher interest rates could possibly send the global markets into a death spiral. So he's not going to talk about that at this time around. Okay, the next thing is the Fed's not going to signal the end of the stimulus programs. Okay, we've had this enormous stimulus. People have been concerned about our growing fiscal deficit. They're just going to continue right along this path. Okay, basically, now that everyone's on the same page, we have to stabilize before, we can handle the new problem, which is going to be, these outrageous deficits and how to tackle that. But right now, the focus is on stimulating the economy. Okay, and getting businesses going and trying to put people back to work. So they're not going to signal the end of their stimulus programs. Okay, in fact, EU leaders are urging the G20 to maintain the stimulus as well. Okay, so now you've got, the European contingent coming out of the G20 meeting, which is going to happen this week, and they're saying, listen, we need to have this prolonged stimulus. The economy is still on fragile ground, and, that it's important to continue with that. So, Bernanke's got some international support there for the stimulus program. So, while you always hear things like, China's growing concerned about this or that or the other thing, there is some international support for Bernanke at this point, and people have finally started to realize that in order for all of us to succeed, we each have to be able to succeed individually and vice versa. So that's going to help Bernanke going forward. Okay, he's unlikely to talk about the end of quantitative easing as well. Okay, and that's just basically, they're talking about all the money that they've been putting forth, into the bond markets to help support some of the toxic stuff, the mortgage-backed securities. They said that's going to end coming up the end of next month, but we have been purchasing treasuries and stuff to support that market, so that's going to be unlikely to change as well. All right, and then what you see is when you see that people are sitting there and the dollar's moving up and people are starting to call for reversals. All right, what you're seeing is smart traders just taking some money off the table. All right, nothing's 100% certain. If you have a lot of cash in the market, it makes sense to take profits a little bit, or maybe to lighten the load, so to speak. So that's pretty much what's going on here. And I wouldn't say that at this point this is going to show a major reversal. All All right. The other thing to look at, and the other clue is that, just this past week, Bernanke said that the recession was over. All right, and he's not going to counter that claim so quickly. I wrote a blog article about it last week saying, hey, that's great that the recession's over, but what are we going to do going forward about growth? He can't come out and say, oh, the recession's over, and then walk into this meeting and say, oh, by the way, I got to raise interest rates. He's going to look awful foolish if that happens. The one thing that we do know about Bernanke is that, he's been very vigilant about trying to avoid the Great Depression 2.0 here that we like to talk about. So he's not going to do anything to upset the markets. Okay, so don't wait. Get educated. Get in a course. Come to www.mywealth.com. Okay, learn about how Fed decisions and Fed policies can really affect your investments.
So, expect the U.S. dollar to strengthen and equities and commodities to weaken going into the FOMC meeting. Okay, smart traders are lightening the load and taking profits. Okay, nothing more. While everyone loves to call a market reversal, dollar strength means trouble for stocks, and Bernanke just won't let this happen. Okay, after the FOMC meeting's conclusion, be prepared to do the opposite. That's namely go back to buying stocks and commodities, and you want to sell the U.S. dollar. Okay, because the trend for the U.S. dollar is clearly down and should continue for some time. Okay, and there appears to be room for stocks to move to the upside. Okay, now we've all seen this show before. To learn more about how Fed policy can affect your investments, be sure to check out our courses. Okay, so I'm Mike Conlon. Thanks for being with me, and I hope to see you in those courses.